Hey guys, welcome back to the Calculated Risk channel. Today I'll be talking about a simple concept. Never sell for a loss. If you started a swing position or a long-term position and you're, let's say, 10% down or 20% down, 30% down, 40% down, 50% down, never sell, okay? Unless you believe the company's fundamentals has changed. For example, I've been talking about Fubo recently for a long time. That's like my main stock on this channel. Of course, I'll be expanding out, but right now Fubo is what's getting me views, and so I'm gonna stick with that. Fubo was at $52, and it crashed to 26 in a span of a month. So that's like almost a 50% loss. Now, has Fubo's fundamentals changed? No, nothing happened to the stock. It was actually it was just a bear market for that short span of time. So nothing changed with the stock. It was just people were losing faith on speculative stocks that were not proven, right? And Fubo was a direct hit from that. And if you sold 3% down, that's just dumb, okay? If you believe in the company and you believe that nothing has changed with the company, just average cost down. If you're at 52 average cost, keep buying on the dips. Okay, never sell the position. You're losing money. Once you sell for a loss, you can never regain that money. Okay, if you're 10% down in a position, don't sell. Don't even put a stop loss. Like, you have to be smart with this. Okay, if you're doing day trading, this does not apply. Day trading is all about quick up and down. If you're doing swing trading and long-term trading, where you actually look into the company and look into what's happening, if nothing has changed, don't sell. Okay, the market over the long term will always go up, whether it's 5 months, 2 months, 1 year, 10 years. At some point, if you average cost down properly and you manage your money properly with how much you put in per, like what I do is I do a small opening position and I scale out over the course of, like, let's say a week or 2 weeks or 3 weeks or a month, right? So I can get a really good average cost, which is somewhere in the middle, but it won't be the top or the bottom, right? Because first of all, getting the top or the bottom right is completely impossible. Like, it's not impossible, but it's very hard to do, and no one knows how to really do it. It's pretty much luck based. It's not up to you. So one day the market can crash and you can get a really good position. One day the market can be really high and you get stuck with a really high price for the stock. Should be fair. So don't put all your money in the stock at once. Scale out. Put, let's say, 10% of your money that you want to use on a play. So you have $10,000 to use on a play, right? Start out with 1,000, then slowly scale up for a month and add more money to the play. So you have a middle of the line average cost, right? So you get the lows and the highs, so you result in getting the middle, if that makes sense. So that's how you start off, and then So and if the stock price goes even further down, and you think it's a good company, and you think that nothing has changed, and it's just a stock market fluctuation for the short term, then just average cost down. Please don't sell for a loss. I see new investors doing this all the time. They get scared. They see a stock down 10% and they sell. Don't sell. Just hold it. Don't look at it. Put it in your Roth IRA. Put it, just don't look at that play. Just don't look at it. Eventually one day you'll wake up, if you average cost it right and you do what you're supposed to do with risk management, you'll wake up one day either break even or in the positive. That could be 5 years from now, 10 years from now, 1 year from now. Okay, if the company fundamentals have stayed the same, unless it's just a terrible stock that some reason invested in, like you invested 300. Let's say you bought GameStop when it was almost 500, right? And then you get stuck with that, right? You're pretty much screwed. Let's be real, because that's not a calculated risk. That's gambling. If you take your time, look at companies that are good, that you like, that you want to be a part of, that you're a customer of, right? And you do the full research from top to bottom about the company, and you have faith in it, never sell. Okay, that's a cardinal sin. Never sell. You're losing money. Unless you have to use the money for something, why are you selling? Unless you have to buy food or you have to buy a car and you need the money from your broker and you have to sell the position, then do it. That makes sense. But if you don't need the money, there's no reason to sell. Okay, so that's just my quick rant. I've seen people on FinTwit and other places that are new to the stock trading community, and they just sell. They see a 10% loss, sell. 20% loss, sell. If you believe in the company, don't sell, right? Unless something has changed. So that's my 2 cents on that. If you're new to the channel, please be sure to subscribe, like, all of that. If you disagree with me or just don't like me, just dislike the video, unsubscribe, block me, whatever. You can follow me on Twitter though if you do like me, and calculate risk with a 1. You can support me on Patreon, patreon.com/calculated risk. And yeah, I'm out.